It is 9 a.m. in Shanghai, in Shenzhen, and here in Hong Kong. You're watching the China Show. I'm David Ingles. Good morning to all of you. We're counting down to the open of markets in Greater China. Let's get to your top stories today. Stocks across the Asia Pacific, as you can see, on the up, tracking gains we had on Wall Street on Friday of hopes growing for a year-end Santa Claus rally. Now, China's more threads unveiling a new generation chip lineup set to challenge AI developers' dependence on NVIDIA. Also ahead, the U.S. pursues a third tanker near Venezuela as President Trump intensifies the oil blockade targeting Nicolas Maduro's government. And coming up as well this hour, an exclusive with the Co-CEl of Chinese biotech firm Jacobio Pharma on its global license deal with AstraZeneca and, of course, opportunities they see in the healthcare sector. Welcome to the program. We're straight into breaking news, straight out of bed. We're looking at loan prime rates unchanged. We had the 1 and you have the 5-year kept unchanged. Okay, we're mixing up words so things get better from here. We're looking at, these are the prime lending rates from Chinese borrowers. We're looking at the 1 year at 3% and the 5-year being kept at 3.5%. They have kept, of course, those prime rates unchanged for several months now. The take, though, as we look ahead to next year, is that the broader conversation is you are getting into this phase of the year where typically you should be getting a bump up seasonally. You are getting the opposite in terms of softer numbers coming through. And the sort of big context takeaway coming through out of Bloomberg Economics, they put this out, by the way, before we did get this breaking news, is that do expect, I'm just going to paraphrase it, do expect monetary easing going into 2026. In fact, just putting a number to that, flip the page, please. I think they're looking at rate cut next year as guiding rates lower. I think 10 to 15 basis points is the general take going into 2026. All that is to say, as we wrap up this year where really monetary policy has provided somewhat of a decent tailwind, that certainly goes away from a macro perspective next year. We are wrapping up the year, which has been fantastic for EM specifically, with gains, as you can see, across the board. Nikkei's up 2%. Taiwan coming online 1.5%. Korea's bottom of your screens coming up too. S&P's up for a third day, a quarter 1% on S&P, 6,900 as far as that is concerned. Euro, you have the euro yen. You have the U.S. 2-year yield coming through as well. Really on the back of what conversations around. You have a rate cut into next year. The question is there's a 2 rate cut being priced into markets going into 2026. Is there upside or downside risk to that number? JGB yields, of course, we topped the 2% handle in case you missed that, of course, last week. We have Tokyo CPI coming through on Friday, so just keep that in mind as far as the agenda is concerned. Right, commodities very much in focus. Up arrow story last I checked. Brent, West Texas, and specifically silver. There we go, 1.3%. This is on the back of geopolitical tensions as it pertains to, well, for one, you had airstrikes over the weekend in Syria, major one at that. And number 2 is we're still continuing to follow the story in Venezuela, of course, or off Venezuela. Specifically, the U.S. is pursuing a third oil tanker, really to put the pressures there. Flip the page, please, on the government as far as financing or the major source of financing is concerned. And it's looking like we are going to get some gains going into the Monday Open today. And yeah, if you missed it, yes, we are at 703. We were at 706 early last week. So, a 7 handle by the end of this year won't be too much of a hurdle to jump. 184 right now on the Chinese 10-year yield. Let's please have a look at the agenda today. So we obviously sectors to watch. You have platform names. We'll talk about that in a moment. Semiconductors. You had this big announcement, of course, out of more threads on the weekend. Apart from that, in terms of data, you have inflation coming through out of Hong Kong. That's number 1 to watch. And what else is on deck? Do we have it up? 3 trading debuts today. Here in Hong Kong. And, of course, the broader conversation is around, yes, we have been struggling to break out of a price range on the benchmark itself, but vol has been falling consistently over the last couple of weeks or so. The Hang Seng Vol Index now at the lowest level in about 4.5 years. Okay, that's the agenda for today. We'll table that for now and have a look at a big story today we're tracking in China. You have more threads, of course, at massive listing, massive gains. The first week of trade, unveiling or introducing this new generation of chips aimed at reducing developers' dependence on hardware coming out of NVIDIA. Min Lo, our China correspondent, has the story for us in terms of that announcement. And what are the new products they're talking about here, Min?
Yeah, so they announced 2 new generations of chips and a new GPU architecture. So the chips are named Lushan and Huashan. They're named after Chinese mountains.
Yep.
The Huashan chips are for AI inferencing, and the company CEO said that it is better than NVIDIA's Hopper series chips like the H100 and H200, and it's closely catching up with the Blackwell series chips, which are the most advanced chips currently available. So this is pretty significant because if Chinese companies can already make chips that are better than the H200, that eliminates the need for them to buy from NVIDIA, even though NVIDIA just got approval to sell those chips to China, right? And we know the Chinese government was, according to sources, assessing demand from Chinese companies and asking them to justify why they have to buy from NVIDIA. So this is certainly an important development. They also announced the Lushan chips, which are for graphics processing, saying that's 15 times better performance for gaming, and also a new GPU architecture that can link together at least 100,000 chips. And they're saying that that increases computation power by at least 50% and is 10 times more energy efficient as well.
Okay. We have a couple more stories to get to here. So let's have a look at this Chinese military list that some Republican lawmakers have put forward. There are some not so new names, but there's some new names involved there. So what do we know about that story?
Yeah, so the Pentagon renews this list every year, and the House Select Committee on China is calling for at least 19 Chinese companies to be listed as Chinese military companies, and they include the likes of DeepSeek, they include Unitree, which is a robotics company, Wuxi as well, a pharma company, so pretty wide-ranging from different sectors, and it shows you that ongoing competition between U.S. and China. I believe Hesai was one of the few companies that had sued the Pentagon, claiming that they have no ties with the U.S. military, and they were successfully delisted, but then they were relisted immediately. And it shows you how difficult it is to challenge these labels by the Pentagon. It does not result in any immediate ban for these Chinese companies, but it is a signal to foreign companies, to U.S. companies, a warning sign to them not to work with these companies and the risk associated with working with a Chinese military company. So certainly something that could worsen ties between the two sides.
Okay, final story, and sort of corner you into the third story here. Platform companies. So we know the story around anti-involution, price competition, what have you, and this is really the latest one on the weekend. What do we know about efforts to maybe backstop some of the competition as far as the price?
Yes, so the Chinese regulator had issued a new set of rules for platform companies, asking them not to impose unnecessary restrictions on merchants to govern their pricing behavior. So, for example, they're not allowed to tell a merchant that, okay, you can't sell your products for cheaper on a competitive platform, and they can't punish these merchants by delisting their products or making their products less visible on their platforms or raising their fees. At the same time, the rules also require the platform companies to clearly state the promotions without exaggeration. So all of these are meant to protect consumers and also smaller sellers that rely on these platform companies, and the purpose really is to stabilize their margins, ensure fair competition, to ensure sustainable growth for the entire sector.
Min, thank you so much. Min Lo, with just a list really of the areas of the market to watch as we go into the open today. That is just to say, of course, despite what you have is really a banner year. We have Chinese equities really coming back into the spotlight. We started with AI there, but some question marks around some parts of this equity market, platforms, price competition. Let's put everything together for you and where we stand going into 2026. Joining us now is Yan Wang, Chief EM and China Strategist at Alpine Macro, joining us here. Good morning from the Asia Pacific, sir. Thank you for joining us. I know, and let me just make reference to your note about 6 weeks ago, first or second week of November, where you did observe, of course, China is hot again. You've been on this whirlwind global tour speaking to investors, including, I should mention, of course, here, Hong Kong, China, and Singapore. What's your overall sense of what people are looking for in the China story going into next year?
I think the biggest takeaway is that global investors are becoming more interested in China again. In 2023 and 2024, China was deemed as uninvestable. Back then, the economy was bad, geopolitical situation was bad. the market was not really performing. So people were not really interested in China at all. But in my recent trips, in my meetings with clients, with investors, I can get the sense that investors are becoming more interested on China. China is back on the radar. And I think this is a very important change because people are still very, very underweight China. So if they are interested in China raising exposure from a very low starting point, I think that can drive a lot of capital inflow into the Chinese equity market. So I think the biggest question mark, obviously, is the market has gone up a lot, right? So actually, the market bottomed February 2024. So the market has been rising for over 2 years, almost 2 years. So the question is whether investors should chase the market because they didn't really have any exposure at all. So now the market just keep rising. So I think the biggest concern is whether going into 2026, whether the bull market can continue.
And what, in your sense, what do you suspect will be the... So we know about the lack of inflation story. We know about liquidity, abundant liquidity that has managed to offset most, if not all, of the former story. And I'm curious to hear what you think in terms of the big question marks and what resolves itself going into next year.
Well, I think really the biggest change since last year is probably investors began to realize China is it's almost imperative to invest in this kind of G2 world, right? So, for example, you mentioned the Chinese chip makers. So all of a sudden, you see Chinese companies are making very advanced chips. A few years ago, that's unthinkable. So regardless of this story, regardless the cyclical profile of the Chinese economy, now you do have two systems parallel to each other. One is the US system, the other is the Chinese system. So I think now people began to realize that every investor has had so much exposure to the US market, but has so little exposure to the Chinese market. So I think this kind of very lopsided allocation is one of the most important incentives for investors to look at China. For example, at the beginning of the year, we had DeepSeek moment. That's when really began to draw global investors' attention on China, not just focusing on the weaker part of the economy, not just the real estate market deflation, but also there are a lot of growth sectors. So I think that's really driving a lot of attentions, also a lot of capital inflows.
And is that distinction visible between the groups of investors that are more familiar with the Chinese market, let's call them domestic players, of course, the home bias, and how does that story, how is the appreciation of that story, how does it change as you look further away from China?
Yeah, so I think the China uninvestable story was mainly concentrated in the US, among US investors and some European investors.
Okay.
So because most of it was because of geopolitical tensions, geopolitical environment, and for European investors, China's role in the Russia-Ukraine war, China was deemed very unfriendly. I think that was I remember in those years when I was talking to investors, even though these investors, they didn't share the gloomy views on China, but they were concerned about so-called reputational risk of investing in China. So I think now this is gradually changing. In Asia, in EM, investors' view on China have always been more nuanced.
Yeah. Okay. So the common denominator going into next year, globally, and you have an EM mandate too, is it does seem like the tailwinds from easy monetary policy will somewhat not be as big a part of the conversation next year, as most central banks either pause or have ended their easing cycle. How do we distill the tailwinds coming through out of looser policy, and what does it mean for the weaker dollar story, which has helped, and appetite for EM assets next year?
Yeah, I think the dollar is a big story. I think if the dollar continues to weaken, then obviously global investors' interest on EM assets will increase. So I think that can still be a factor. On the other hand, I think the Fed will continue to ease. We believe the U.S. inflation will continue to fall, so that will allow the Fed to ease. And then you see a lot of EM countries, their real interest rates are still very, very high, right? So I don't think the monetary easing tailwind will diminish much next year, especially for a lot of high-yielding EM countries, especially like in Latam and South Africa. In China, the monetary easing may not be a big story, but a lot of the major headwinds that we have had this year will diminish, right? So, housing has been in such a long, deep slump. Consumer confidence has been so weak for so long, and Chinese exports to the U.S. this year contracted a lot. So these are really the major headwinds for the Chinese economy this year. But most likely going into next year, all these three negative factors will either stabilize or even improve. So I think on the China front, I don't really think monetary policy easing will play an important role because the problem now is demand for loans is very weak. It's not the interest rate is not affordable. Its demand is weak. But if these three headwinds will gradually turn into some kind of tailwind, then I think the Chinese economy will perform a lot better.
That's a big if, and I'm glad we end on that. Can I just ask you a little bit more on the housing market and consumer confidence? We know if that goes away, it doesn't matter if the PBOC is tightening interest rates. The market will rally if those two things recover. What gives you the confidence, apart from base effects, that the housing market and consumer confidence will be a better story in 2026?
Right. I think the consumer story is probably easier to tell because if we look at over the past 2 years, there was this kind of self-feeding vicious circle between the corporate sector and the consumer sector. The corporate sector was not hiring, so consumer confidence was weak. And then consumer confidence weak, demand was weak, then corporate sector was not hiring. So now you have this kind of very vicious circle between these two, self-feeding. But now we are beginning to see some evidence that corporate sector hiring's intention began to improve. So across the board, even when I was in China talking to to the business community, my sense is confidence is slightly better than my previous trips. So I think if that changes, I do think there are high odds of this being changed. Then the vicious feedback loop between the corporate sector and consumer sector will begin to reverse. So I think that's a kind of higher odds event. On the housing sector, the simple fact is the housing sector has contracted for over 4 years. Housing starts have contracted by over 70-80%. So nothing falls forever, right? So I think that's why even we do not consider this kind of base effect. I suspect we are very close. We are a lot closer to the bottom than another 10% down.
Right. Yen Wang, appreciate the insights, and of course, thank you for the company this year. We'll talk to you next year again. Yen Wang, Chief EM and China Strategist there at Alpine Macro. Commodities in focus today. You have oil bid, precious metals even more so. Maybe on this story we're talking about next as the U.S. intensifies its blockade on Venezuela. Let's call it the geopolitical risks coming back in ever so slightly. Details on that story coming up next. And counting down to the open of trade, the Monday open, Shanghai, Shenzhen, and here in Hong Kong futures are pointing higher. This is the China Show. All right, as we've been talking about here, oil is on the way up, also across the precious metals space. Bloomberg's been told that the U.S. is still pursuing this third oil tanker near Venezuela. Let's get to the details on what we know so far in the story and bring our oil trading reporter Wrong Wei Neo in Singapore for us. Get our viewers up to speed. What happened over the weekend, sir?
Right, so David, like you rightfully mentioned, that the US authorities are still in pursuit of a third tanker, and this comes shortly after they've boarded a second tanker on Saturday, and after an earlier seizure this month. So this comes as all these moves don't come as a surprise because the Trump administration had actually ordered a blockade of vessels going out of Venezuela, and this comes as the Trump administration is ramping up pressure on the Maduro administration by crippling one of its largest revenue-generating stream, which in this case, the oil trade. Now, of course, if this goes on and Venezuela's oil exports are curbed, what could happen is that its oil storage facilities in the country will start to fill, and eventually Venezuela may be forced to close down some of its oil wells. But I would say across the escalating actions over the weekends by the US administration on Venezuela, what really took us by surprise was the fact that the second tanker that they boarded, in this case, this tanker called the Centuries, it's actually not on any official sanction list. And the oil that this tanker is carrying is actually owned by a Chinese company. So what this action could actually hint at is the fact that the US administration is not only ramping up pressure on the exporters and the oil exports coming out from Venezuela, but this could very well hint at the fact that the US administration could also ramp up pressure further downstream, which in this case are the oil buyers.
All right. How much upside potential is there in oil market? Just very quickly, sir.
All right, so potential upside, definitely it will be slightly bullish. Now, that's also because of the fact that Venezuela is home to the largest known oil reserves globally. But we do have to note that the Venezuelan oil trade is quite a peculiar and quite, we would sometimes call it like a two-tier market. That's because oil coming out from Venezuela typically only goes to two buyers, in this case, the US and China. Now, Venezuela has actually been sanctioned for a bit, for quite a while across the years, and the only reason why the US is able to take oil is because its company Chevron has been granted a license to kind of supply Venezuelan oil back into the country. So this whole sanctions has actually made the trade quite convoluted. So it's not likely to have a much higher impact on the wider oil markets because of its very nature.
All right. Thank you, sir. Rongwei Neo there out of Singapore for us. Hang Seng Index half of 1% to the upside last we checked. A full preview of the Monday session is just ahead. Right, welcome back. As we approach the opening bell, we're called higher across this equity market. Loan prime rates, in case you missed it, kept unchanged in December. Plenty more ahead, including the open. This is the China Show. Good morning. Welcome back. You're watching the China Show. So as we are close to wrapping up 2026, we're looking at gains still. So the question mark, actually the headline suggests we're still hoping for a Santa Claus rally. Aren't we getting one? Quite a decent sequence of gains already going into the open today. Volumes obviously are going to be on the thinner side as we approach, of course, Christmas and on to the new year, but that is just to say, of course, price has been on your side when you look at markets like Japan, for example, is doing well. Taiwan is doing well. That's a chip story. Within the chip story, there's more threads coming up. 1% on the upside. Big announcement over the weekend. We'll talk more about that in a moment. And so the reason I sort of caveat price is while price maybe has yet to break out of recent ranges, when you look at Hong Kong, for example, what has been sort of your sliver of solace is a measure of implied vol has been hitting new lows. In fact, 4.5-year low now on the Hang Seng Vol Index, which basically goes to show while people aren't too excited overall over price, people aren't overly worried about what's going on so far. Onshore, 0.5% to the upside. We are going to get PMIs, of course, as we wrap up the next 2 weeks or so. And we are also looking at a stronger fixing, and we are closer to 7, of course, 703 right now on dollar China. Flip the page, please. And just also to mention here, no change in the 1- and 5-year loan prime rates about 30 minutes back. That's for December. Our folks at Bloomberg Economics and believe they should not be alone in this call. Do expect for lower rates over the next couple of months or so. Right, speaking of Hong Kong, Hang Seng China, here's what's interesting. I'll get you a chart in a moment here, 0.5%. We did see that when on a weekly basis, here we go on your screens, right? First red circle, that is the week of Liberation Day, and the low of that week took us to about the 50-week moving average. Now, the start of, well, this time last week, Monday, Tuesday, were challenging when you look at price itself, and we did a similar dynamic there where we bounced off that similar 50-day. That is just to say the uptrend does continue despite the fact that we have been range-bound of late. The other thing I mentioned earlier on, let's bring up a 5-year look at the Hang Seng Vol Index, and we're now at the lowest in over 4 years in that, 17.3 on the VHSI. So that is a good setup going into 2026, given the sort of catalyst we're still waiting for as far as the cyclical recovery in the economy is concerned. That circles back now to geopolitics, which going into this year was front and center. Not to say that it's not going to be going into next year, but perhaps less so. And a reminder of that are possible blacklist additions, some of the names putting up on your screens right now as far as the Pentagon list of Chinese companies that they say are tied to the Chinese military. More threads, we talked about that, and some of its suppliers, 1% last we checked, and more thread suppliers coming up as well. On your screens, are we getting any sort of market reaction to that story? Not so much, but of course on the stock itself, we're up 3.5%. And some of the debuts today here in Hong Kong, I believe 3 or 4 on your screens very shortly. And it has been a good year, of course, for these stocks. And more threads, of course, you remember about 3 weeks back, had a 450+% move. That is an A-share market. And, okay, there we go. That's Christmas for you. The red side of things. We're down across these listings here. Trading debut specifically here today. Okay, let us pivot slightly. So we talked about, in fact, you know what? I'll put the chip story and the listing story together for you right now. This rush to the IPO market, raising funds among the chip makers that are key, of course, to the nation's goal of being self-reliant as far as technology goes. This global race in terms of AI supremacy. Sang-Mi Cha, our Asia Equities reporter, is here to put everything together for us. And you have this massive rush to raise money. What's going on?
Yeah, just like you mentioned, MetaX, it had 755% pop on the first trading day, right? And, following more threads. So there's a huge insatiable demand from onshore retails to participate in these IPOs, right? So we see that, and we see a lot of that oversubscription in numbers, and that's why we are seeing so many of that rush into these IPOs. But of course, for the companies themselves, this is just the best time to bank on this AI frenzy, right? And it's the timing is just great, and some of them are looking for secondary listings, and for them, it's just the best time to raise some funds, to actually boost some of their R&D. But also, this is just the right time to list their stocks. Yeah,
and people are scrambling for an allocation for these IPOs, right? Given the sort of 400+ percent moves. So give us some names. Who do I call my broker for hopefully an allocation for?
Yeah.
Not me, of course. That's figurative.
Sure. So local media have been talking about these like 4 little dragons in this GPU space, right?
Okay.
So we have MetaX, more threads, but Beer Technology, for instance, and the Iluvatar CoreX are one of those little dragons, and they are the ones that are actually contenders, the domestic contenders to NVIDIA in China. And some of these stocks are, they're looking at Hong Kong listings. And we have been seeing so many reports about them. Now, we have Yangtze Memory and the Ka-shing memory on the memory side. So DRAM and NAND makers, which had for long period of time has been dominated by Samsung and SK Hynix. These are on the memory side. Now we have Kunlun, which is the AI chip arm of Baidu. And Baidu hasn't been doing very well this year in terms of stocks performance, but it's rallied so much ever since that news that it is aiming to go Hong Kong IPO for the Kunlun, the chip arm. And we have companies like Montage or Giga Device. These are the stocks or the companies that sit in the picks and shovels of the whole AI supply chain. They're all aiming to go second listing in Hong Kong, each to raise about $1 billion.
Yeah, here we go with some of those names. And, this is really a group of stocks that investors have fallen in love with as China builds its AI ecosystem. The opposite of that are consumer stocks, right? The longest ever streak of underperformance against the benchmark. Is there more pain ahead, or is this an opportunity to get in and realize some of the value here?
Yeah, so the biggest change is the consensus is that this is not just a cyclical slowdown. So it's not going to rebound quickly, but it could be a multi-year of these lull that we're seeing. And we see that in CSI onshore staples or consumer staples names that are down significantly, 4%, but that compared to the benchmark CSI 300, which is up 16%, that is the stark divergence. So it's kind of like the companies that are targeting the average Chinese consumers are just not doing well. And we see that in the liquor names like Maotai and Wuliangye, who have been the proxies for Chinese economy and wealth. They have slumped so much. Wuliangye is down over 20% YTD. And we see that in the same names in autos or, appliance makers like Media or BYD. They're all flat or down. So that kind of tells you that trading programs like the over $40 billion stimulus that we have seen from China in 2024, they have boosted that demand back then, but it hasn't created new consumption. But again, there's corners of opportunities. The new consumption names like toys and pet products or your favorite like milk tea chains, they're continuing to do well.
It looks like you're outlining my usual weekend there. Sang-Mi, thank you so much. Yeah, and the full screen, when the chart makes that, what is that now, an alligator profile chart pattern, that might be, that's banter, of course. There we go. That's just to show, of course, the recent underperformance. They moved in tandem, but of course, in 2025, one has gone the opposite way of the other, forming, of course, that. Is it an alligator or is it a crocodile? I don't even know the difference. Anyway, thank you so much, Sang-Mi Cha there. Now, just some more details on some of the stories that we were just talking about there with Sang-Mi, right? So you have Shanghai Piren Tech, that's an AI chip maker there. It's seeking up to $623 million in a Hong Kong IPO. The filing says that the company will offer 247 million shares, 17 Hong Kong dollars a pop. Trading is set to begin January 2nd. Now, Chinese chip makers have been rushing, we talked about there, to list in a bid to raise funds as Beijing makes tech self-reliance a key priority. Now, Chinese OpenAI challenger Zhipu has filed an IPO prospectus with the Hong Kong Stock Exchange after clearing its listing hearing. The 6-year-old startup has already completed 8 rounds of financing. 8, wow, okay, raising $1.2 billion. Its co-founder told us earlier this month it was making progress in convincing Chinese customers to pay for AI. Now, Singapore-based investment firm GLP is said to have selected banks for its Hong Kong IPO, which may happen as soon as the first half of next year. Our sources say banks include Citi, Morgan Stanley, although details have not been finalized. GLP invests in sectors including digital infrastructure, logistics, and renewable energy. Right, just ahead, a closer look at biotech. Beijing-based, Hong Kong-listed Jacobio signed a licensing deal for AstraZeneca for the distribution of a new cancer drug. We'll speak exclusively with the Co-CEl. Coming up next, this is The China Show. Good morning. Right, welcome back. You're watching The China Show. We have Chinese biotech firm based in Beijing, listed here in Hong Kong. Jacobio Pharma stock on your screens. We're down about 12% today. Not very liquid, of course. That is just to say, of course, things could likely get better. In terms of the company's prospects, the company said it has entered its global exclusive license agreement with AstraZeneca for an experimental cancer drug. Joining us exclusively to talk us through the prospects in terms of development and at some point commercialization of this is Andrea Wang-Gillam, Jacobio's Co-CEo, Chief Medical Officer, and Global Head of R&D. A lot of hats. Andrea, thank you so much. Good morning from the Asia Pacific. Thank you for joining us. So you guys signed this when, and what does this deal allow you, what do you get out of this deal specifically?
Yeah. Thank you. We signed a deal yesterday, actually, with AstraZeneca, co-developed our KRAS G12, pan-KRAS inhibitor. What this deal allowed us to do is the AstraZeneca will have exclusive licensing to develop the drug ex-China and help global development in eventually commercialization globally. It provided us $100 million upfront payment, which allowed us to continue to invest our R&D in China. On the top of that, actually, interestingly, we are doing co-development, co-commercializing our pan-KRAS inhibitor in China, which also help us to eventually commercialize in China.
Okay, so we'll talk about the commercial aspect in a moment because I'm curious to see what exclusively remains solely under your purview in terms of the benefits commercially and what then goes to the partner. But can you talk to us a little bit more, maybe I know you're Chief Medical Officer and Global Head of R&D, but if you could just simplify that for us, what the pan-KRAS inhibitor product, what does this do? And when you look across the competitive space, do you see any potential competitor to this?
Yeah. So KRAS actually is a gene. KRAS changes actually occurred up to 23% of cancer patients. Their tumor have this particular genetic changes. And with this, it lets the cancer grow faster and also make the cancer move metastasis. So it's a really important oncological target. We developed this drug, try to block this signal transduced by RAS. And this actually implication in about 2.3 million patients yearly global-wise. So it's a really important drug. Global landscape, there's definitely competitors, but we are the first small molecules, one of the first small molecules to enter the oncology space for this particular targeting in KRAS.
Understood. Well, partly because, okay, I'm not a medical person, but yes. Okay, thank you so much for clarifying that for us. Okay, so you're now in, if I understand correctly, and correct me if I'm wrong, phase 1 trials. If all goes to plan, with the money that you have now that allows you to develop this, and of course the partnership and expertise from your new partner, when realistically do you expect this to become commercially available?
Yeah. We anticipate probably in a few years globally.
Okay, well, a few years could be in 2 or 10. Is it closer to 2 or closer to 10?
Probably in 5 years. Yeah, in the between.
Okay, let's split the difference. Okay, can I just ask you as well? So I'm just reading through the press briefing, and pardon my attention to detail here. This is probably just my press hat. So I notice here that and I'm just going to paraphrase for our viewers here. Under the terms of the agreement, your company is eligible for commercial milestone payments of up to US dollars 1.915 billion. Is that another way of saying that is the upside that is capped as far as the ex-China business is concerned because of what this agreement does?
Yeah, this is more, and also additional, we'll get royalties. So.
Okay. So it's this plus any royalties. Tiered royalties. Okay. How big do you think the domestic market will be for this drug? What are the initial estimates?
It is a very big market, I think. It is a very big market because targeting 90% of pancreas cancer, 30-40% are colorectal cancer, and also 30% in non-small cell lung cancer. So I think it's a tremendous market. Initially, was estimated we will have 100 millions. 200 billions global market. Domestically will be actually a big part of it.
Understood. Since you mentioned specifically pancreatic cancer, and a lot of people know, as you know, this is one of the types of cancers that is very, very difficult to detect. And once you have information that you do have that's usually not very good news. Help us understand how this might actually change people who eventually find out that they have pancreatic cancer, and does this increase their chances?
Yeah. Patient with pancreatic cancer actually have 50% of patients with pancreatic cancer at the time of diagnosis, they have metastatic disease already. And so for this drugs, we plan to bring to the early settings, which once they diagnose, potentially they can be treated with this oral drug rather than chemotherapy. Eventually, even the early stage, even when patients have tumor resected, they potentially can be tested out to use these drugs. So we really going to be improve the outcomes of patients with pancreatic cancer, eventually hopefully cure pancreatic cancer.
Understood. Can I just, final couple of questions for you here. So I'm just looking at, so you mentioned in 5 years. So clearly, if that's the base case, this drug will not be contributing to financial performance next year, even 2 years from now. The market just wants to get a sense of how big the company gets over the very short term. Some of your revenues in 2023, 63 million, this is renminbi, 156 million last year. What does that number likely look like, full year number for this year, revenue-wise? And what is your target for 2026, if you could share some of that information with us?
Yeah. So again, so I think those information will be improving for 2026, and we anticipate receiving the 100 millions 2026. So I think that will be the boost for our financial strengths. And so I think that will be the most of the coming, for the 2026 will be that upfront.
Okay. And can I ask you directly, when do you think the company will be profitable?
That's a good question. Well, hopefully we'll be profitable in a few years, at least. And as a chief medical officer, I would say in 4 or 5 years.
Okay. 4 or 5. Okay. Alongside this drug. Maybe it's a final question since we started out, of course, and perhaps let me just say, it's probably safe to assume that many people are hoping you succeed with this drug, given, of course, the nature specifically of pancreatic cancer, and people who find out who do have that. But what are the risks that you see as chief medical officer of getting this through the trials and hopefully becoming commercially available in 5 years? What are specific risks that markets should be paying attention to?
Yeah, it's a very competitive landscape. So that's why we partner with AstraZeneca for global, approval, acceleration of global development and future commercializations. I think that's the risk is actually the competitive landscape of this. So we have seen early signals that make us very confident. From the drug safety efficacy profile, we don't really have any concerns. But I think it's really the competitive landscape.
We'll take that as good news for everyone in the world. Andrea, thank you so much for the time. Andrea Wang-Gillam there, Co-CEO, Chief Medical Officer, Global Head of R&D at Jacobio Pharma. Right, just very briefly before we just head to a short break and talk more, I imagine, about this in a moment. Spot gold has now surpassed the peak that we had a few weeks back. We're set to hit a fresh record high on spot specifically. So we'll talk about that in a moment. Plus, of course, if you're a subscriber and you want to rewatch the interview we just did, TV Go is the function you run for our clients. Become part of the conversation. Check it out, TV Go. This is The China Show, and this is Bloomberg. Welcome back. Here are some of the stories we're tracking at this point. President Trump has announced deals with 9 more pharmaceutical companies here in a bid to lower drug prices for some Americans. The agreements with companies including Sanofi and GSK here come in exchange for a 3-year reprieve from threatened tariffs. Now, the latest pledges include price cuts for low-income earners and matching of international prices. Now, Disney's Avatar, Fire and Ash, has debuted at the top of the Chinese box office, earning almost $58 million in its opening weekend. It's the second highest debut for a foreign title this year after Zootopia 2. China's box office take has topped $7 billion this year, exceeding already last year's total. The top 5 foreign films have generated about $850 million. Right, just for a brief look at markets and just stay a little bit on theme here, a little bit down here as far as some of the film and movie-related stocks are concerned. I would imagine this wouldn't specifically be a function of Avatar doing well, maybe the fact that some of these names have done well over the last couple of months or so. Right, back to the here and now in terms of the key themes, and this next board will actually show you a lot of the key stories we're tracking across equity markets, specifically, not just in China, but specifically across the world. So you have Zijin Mining, and we talked about gold, we talked about silver. Silver hitting a new high, gold a few minutes back, set to top a new high there, 43.81 on spot. It topped the recent high back in October. SMIC is a chip story. I would imagine as a percentage, that's actually one of the bigger gainers. Might be down to the good news around the good news around what was the company that announced over the weekend? Okay, we're looking at Meituan. That's also on the back of an announcement on the weekend on platform companies being alleviated as far as the price pressures are concerned. And Wuxi Bio, that's the Pentagon story and potentially being included, but that's not a news story. 1.5% moving against the grain. A quick glance at benchmarks, and we will leave you with a look at that as we go into a very short break. And the second hour of the China show is just ahead. This is Bloomberg. Good morning and welcome back. You're watching the China Show, the CSI 300 on your right, 30 minutes into the session. Of course, a beautiful, seems to be, when the skies are that clear and blue, that probably means it's probably colder than it actually looks. Shanghai winter morning, if you will. In terms of market moves, we're almost evenly split between up and down in the CSI 300, more in favor, of course, of gainers. At this point in time, 0.9%. In terms of some of the sector movers, telcos are doing most of the heavy lifting there. CSI is up on price. We are up, of course, and we're just looking to break out 4,600 again. Is that key level to watch there. Let's bring in our co-pilot this hour. Belle is in Sydney for us. Yeah, Belle, how was your weekend? It's very nice to see you, number one. And how are markets doing? What are you watching?
Well, I guess, my weekend was spent at the beach, so I guess that tells you kind of what's happening in terms of trading activity in some parts of the world, and definitely in Australia, a lot of traders are already into their holiday breaks. So I'm just taking a look at trading volumes, and we're a bit thinner than usual here in Sydney. But overall in the markets today, I think the general story is very much around maybe this prospect we're going to get that year-end Santa Claus rally. It's something that we've been sort of talking about the last couple of weeks, maybe not eventuating, but we did see US stocks and the S&P 500, for instance, ending last week higher, or at least erasing its losses. And also that story is still in big tech, because today it's really big tech that's moving the Asian benchmark to the upside. You can see here gains of nearly 1%. Standouts like Taiwan, for instance, again, tech heavy. And also the Kospi there, Nikkei, more than 2% higher. But that's also the story around the FX markets, because you take a look at the Japanese yen, for instance, and you had that weakness post the BOJ decision on Friday. You had Governor Ueda as well signaling that there's more easing ahead coming into next year. So very much the question, or tightening rather, coming into next year. But generally, central banks are perhaps setting up for at least ending their rate hiking paths or cutting paths, or even setting up again to have further moves to the upside. But just keeping an eye on really pretty range bound, actually. Again, just back into that holiday theme we see for FX traders. Commodities, though, is one of the big standouts so far in the session. And just some of the headlines we've seen, both spot gold and silver rallying to fresh record highs. Again, it's those bets around what the Fed does next. Geopolitical tensions as well arising or factoring into this, because we actually have seen oil moving a bit higher, and that's with all of these events, geopolitical developments around Venezuela, but also the prospects or discussions that we see between the US, Kyiv and also Moscow, Dave. But let's get more on what traders are looking for today. Bring in our Bloomberg MLI strategist, Mark Cranfield, who joins us out of Singapore. So, Mark, what's front and centre for you in the session so far?
I think the good mood that you're seeing across asset classes today, and this Santa Claus rally getting back on track here, has really got a lot to do with what didn't happen last week. So going into last week was a big week for central bank meetings. We got through it all pretty smoothly. And the biggest risk to risk assets something going wrong before year end was really the yen. So there was some people were holding back a bit, thinking that the Bank of Japan meeting, they were expected to raise interest rates, and the uncertainty was how would yen traders respond to that? Would there be a repeat of what we saw in 2024 when the yen, there was massive short covering after a BOJ interest rate hike, huge yen short covering, that triggered a massive sell-off across asset classes. Didn't last very long, a couple of weeks, but it was very, very damaging. Well, that didn't happen. We got through the Bank of Japan meeting and actually the yen weakened slightly. Huge sigh of relief across markets because all those people who've got carry trades on with the yen, all those who are using it as leverage for other things, they can all sit back and say, thank goodness it's out the way. We can get on with equities and commodities and all those other things. And that's what you're seeing today. Silver, platinum, all rallying hard. Equity markets in a very good mood. And bond markets pretty tame. So nothing really to get people too worried. So it's really a lot to do with the fact that the yen did not have a big rally last week, and it doesn't look as though it's in store for the near future either.
Mark, maybe just a little bit on that. So, I mean, the 2-year Japanese bond yield, maybe just as an example of the broader melt-up we're seeing just about across the curve on JGBs. You know, 2 years up, 1.13. That's quite a spike. The 10-year, we took, I think, the 2% handle out last year. At what point, and I think you alluded to this just as you wrapped up there, that not anytime soon, but at what point do higher yields mean a stronger currency?
It's really about the pace and being reinforced by central bank language as well. So the issue here is that Governor Ueda spoke on Friday. He did say that it looks as though neutral rate is maybe a bit higher than people were expecting before. Instead of 1%, maybe it's closer to 1.5%, somewhere around there. The problem is he hasn't given any timeline about when he intends to get there. And it was a torturous process. Raising interest rates last week needed the backing of all the Japanese politicians, especially the Prime Minister. It took such a lot of work to get there, and he's suggesting there's a lot more work to do if he wants to raise interest rates again next year. So from a trader's point of view, you're telling them it's going to be a very long, drawn-out process. Inflation is still around 3%. 2-year Japanese yields are only just above 1%. That gap is very significant. We've got a 2-year JGB auction coming up on Christmas Day, of all things. That's going to be pretty tough to get off the ground as well. So while you have the negative rates, and they don't look as though that's going to change for a long time, that's not very encouraging for fixed income people. They like to see real yields. They like to see positive carry. In the long end of the US Treasury curve, you can pick up a little bit of positive carry. You cannot do that in the Japanese curve.
Okay, watching for Christmas. Santa Claus rally meets the Widowmaker. Mark, put it on your T-shirt. Mark Hanfield there, our MLive strategist in Singapore for us. I look at Chinese stocks, chip stocks specifically right now. So we have more threads up 2.5% off highs a little bit. Some of the fabs, as you can see on your screens, Cambricon, of course, designer 1.5% to the upside here. Well, the big news really on the weekend is really down to the top name you see on your screens here. The company introducing this new generation of chips aimed at reducing dependence among AI developers on NVIDIA. Min Lo, our China correspondent, is here on set with us to talk us through the new products and how they actually compare to what NVIDIA currently offers the market.
Yes, so Motorz has introduced 2 new generations of chip, and the Huashan chips, named after a Chinese mountain, by the way. The CEO says that this chip is better than NVIDIA's Hopper series, the H100 and H200, and it's closing the gap with the current Blackwell series. So again, this is something that is incredibly significant for China because it is narrowing the gap with the US, and it also eliminates the reason for Chinese companies to buy NVIDIA chips. after NVIDIA got approval to sell the H200 to China. The company Mothreads also launched this or announced the launch of this new graphics processing chip Lushan, which they say can have 15% or 15 times better performance on gaming. It also launched this new architecture, GPU architecture that can link 100,000 chips together in this supercomputer cluster. And that's said to be 10 times more energy efficient and have 50% increase in computational power as well.
That's the ideal scenario. There are bottlenecks that a company is facing. What are those bottlenecks?
Yeah, so a variety of factors. So one, of course, is the foundries. Right now, they still have limited access to the advanced lithography equipment. So SMIC, for instance, can only make their ability to make 2 nanometers or sub 2 nanometers chips are still very limited. And another factor is also that Mothreads uses its own proprietary computing software called Musa, which is positioned as an equivalent to NVIDIA's software called CUDA. So then companies wanting to use Mothreads chips, they have to adapt some of their software to integrate with Mothreads technology. So there's a bit of an adaptation cost there. And of course, when it comes to that AI architecture linking 100,000 chips, that depends a lot on the interconnectivity, right? The hardware and the chips that allow them to communicate with one another, the end-to-end bandwidth, whether it can allow, smooth processing of huge amounts of data. All of that is very dependent on how it actually works when it's being implemented, and we don't have details about how that looks like yet.
It's interesting as well, I think, just on that point around capacity constraints. I mean, a lot of different chip makers in China have signaled that they want to increase production capacity next year. Huawei, for instance, Cambricon is signaling more threads now. But what about in terms of the geopolitical tensions as well? And this is a bit of a broader question, but we have seen these agitations maybe for the Pentagon list to be updated and to have more Chinese names added to that. What are we hearing on this front?
That's right. So we have Republican lawmakers lobbying for at least 19 more Chinese companies to be listed on the Pentagon list that would then suggest that these companies have ties with the Chinese military. So among them include DeepSeek, the robotics firm Unitree, Wuxi as well, which is a pharma company. Huahong is also on that list as well. And so it's pretty wide-ranging. Of course, it really depends whether the Pentagon will take into consideration what the U.S. Republican lawmakers are asking for. What it eventually does is it doesn't result in a ban to work with these companies. Well, the Department of Defense can't work with those companies if they're on the list. But U.S. companies, I guess, for them, it's a warning signal about the risk of being associated with these companies. So it's going to be quite bad for these companies if they want to expand overseas or work with overseas suppliers. And I know, for example, that Hesai had once was one of those companies that got off the list. They sued the Pentagon, saying that they have no ties with the military. They got off the list, but then they were immediately relisted after that, and it really shows you how sticky that label is. It's been very hard to fight against the Pentagon.
Min, just a quick mention. Looking at Meituan, shares are up. I think we're up a fourth day. It's coming up on your screens for our viewers here. What do we know about the tightening oversight over price competition?
Yeah,
how does that work?
The Chinese regulators have come up with a new set of rules for the platform companies because they have a lot of power over these small mom and pop sort of merchants that list on their companies. So the new rules now state that these platform companies cannot require or place unnecessary restrictions on merchants to govern their pricing on other rival platforms, and they cannot punish these merchants by raising their fees or delisting their products or making their products less visible to consumers. So this is meant to protect the smaller merchants, to ensure fair competition. Part of the rules is also to ensure that promotions are clearly listed and there are no exaggeration of these promotions as well, so that consumers are not conned into buying certain things. So it's all about increasing transparency and protecting the smaller players to help stabilize their margins and create a sustainable growth for the sector.
Min, thank you so much. Min Lo, our China correspondent there. Just ahead here on the China show, we'll have a look at fixed income markets, likely supply coming through in the offshore space, and the outlook for 2026 with CICC. That's coming up next. This is the China show, and this is Bloomberg. You know what? It's been a really good year if you're in emerging markets, not just in stocks, right? You look at currencies, you look at the terrible year the dollar's had, you look at the capital flows we've seen across EM, cross asset, right? So I think we have a specific measure here at Bloomberg that has a look really at capital flows in EM. So we've fantastic piece, and a shout out to our colleagues at Bloomberg News who put out the story for you. It's on the terminal if you're curious, by the way, what it looks like. But we put together the key takeaways on a graphic for you in this banner year for EM equity markets, right? The most capital flows in about 16 years, since 2009. It's not a coincidence that, of course, the dollar has been on the softer side. It's the worst year this is specifically the DXY, the DXY, in about 8 years or so. The fixed income has done very, very well. Credit, for example, and the spread over treasuries has tightened to the narrowest in about 11 years or so. And a measure of carry trade, well, profits tied to the carry trade are also back to the highest in since 2009. So you can check that story out for clients, of course. It's on the terminal. It's also on Bloomberg.com. And that takes us very nicely into our next guest and the outlook for fixed income, given the macro outlook, and what does it mean for renminbi issuers going forward. Joining us here on set, Janessa, investment banking MD and head of offshore debt capital markets at CICC. Good morning.
Good morning, David.
Very nice to see you. So, going into next year, the Fed's told us, well, they've cut thrice. They're not sure if they're going to go all the way. They're data dependent. So the dollar does remain relatively a higher yielding currency relative to, say, where we are here in the Asia Pacific. How does it affect your work? What are the big things that you're looking out for next year?
Yeah, well, thanks very much for having me, Davey. I'm very glad to be here. I think as a DCM banker in the market, my job is actually to create transactions and bring multi-currency deals into this market. What I've seen from this development of the interest yield curve here, as you said, dollars is on the path to do this interest rate cut, while at the same time, the convergence of the rates, the differential between the rates between different central banks and U.S. will be more and more clear into next year as the gap between this yield differential will narrow significantly, especially when the U.S. Fed, they cut rates maybe at a higher pace than the Central Bank of China. That will actually closer the gap between these two central government yield curves. And I think that will create more opportunities for these bond market. And we might see some comebacks of the dollar transactions from Greater China regions into this market, which has been decreasing significantly for the past 3 to 4 years. We had a outstanding volume of China DCM at roughly $1 trillion at peak in 2021. Now this figure has dropped significantly to more than $600 billion in the market. So the Greater China investors have a lot of reinvestment risk for them with this shortage of this $400 billion. So that's a trend I think we could watch for next year.
Right.
And in the meanwhile, because of the stability of the currency of the Chinese yuan and also the resilience of the economy that China has demonstrated, during this, the tariff situations this year, especially, I think the yuan markets will also be booming because the demand will not only come from the domestic issuers and investors, but also we see the diversifications from outside of China. For example, this year in the dim sum bond market, which is the offshore bond markets of Chinese yuan, we have seen a significant increase of international issuers worldwide from the Singapore, from the government of Indonesia, from Europe, like OTPP Bank, from Central Asia, like the Development Bank of Kazakhstan, the Kazmunaya Gas from Kazakhstan. All these diversified issuers came to Hong Kong to tap the dim sum bond market. I think it's a very interesting case to establish here. And also, if you look at some deals that happened this year in Hong Kong, one interesting deal is with the China MOF US dollar deal.
Okay.
That we actually lead the underwritings of that.
That was
deal.
the offshore deal, right?
That was the offshore deal.
Do we get more of that? More sovereign issuance next year in dollars?
I think China MOF priced a $2 billion USD bond in the market for 3 years.
Okay.
And then if you look at the credit spreads to US dollar, it's actually zero. So the deal was priced at Treasury plus zero credit spreads for the 3 year and Treasury plus 1 basis point for the 5 year.
Okay.
With a total deal size of $4 billion across in 2 tranches. If you look at the stats, even at a zero spread, we attracted more than 40% of investors from central banks worldwide. And guess what happened in the secondary markets? The bond was traded below the Treasury in the negative 20 basis points, something like that.
Okay.
Some argue that was driven by the tax shield from the Greater China investors. But this links to another story from the Greater China investor side. As you know, the current interest rates environment was still China has a very low interest rates environment. So currently the 10-year CGB bonds in China is only like 1.8%, while the US 10-year Treasury is like 4.1%. So this gap between these two rates actually creates a lot of demand from Greater China investors to diversify the investments in the offshore markets.
Okay, we've opened up a lot of doors. That's a lot of information. So one thing that stood out to me is, you could shed a lot of light on this, is across these multiple fronts, where does supply look to be the most active in the first quarter of next year? Which specific market, which specific currency under your specific watch?
I think within APAC markets, given China has always been a very big player, which accounts for roughly 50% of the supplies.
Okay.
So I believe the trend will continue into next year, but you will see more and more issuers in the dollar space, but may not in the plain vanilla bonds, but also probably the convertible bonds, increasing the supply in the convertible bonds, given the upside of the equity stories, as well as the relatively high yield in dollar. We're still sustaining the next year. And then we'll see a diversified supply actually for the dim sum bond markets, maybe from regions from Southeast Asia, from Middle East, from Central Asia. I think the logic behind for people to seeking for diversification is actually not only to get a cheaper funding source from the diversification into renminbi, but also to get a sustainable new currency market to borrow. For example, in the case of the government of Indonesia...
How deep is the investment pool? Just to ask you on that. Because they're tapping a new investor base, to your point, right?
Yes.
So how deep can that market get in terms of liquidity?
Yeah, that's a very good question, David. I think speaking of the dim sum market, it's still a growing market, and it's still at a infant or a baby stage as compared to dollars or euros or the hard currencies markets.
Right.
But we have seen some really trend on the diversifications not only come from the international investors who has gaining momentum in playing in the renminbi bond products, but also the keenness of the domestic investors who are keen to deploy their capital from onshore to offshore. I'm not sure if you heard about the mechanism we call Southbound Connect scheme, which is basically the infrastructure that links the China market with the Hong Kong market via the CMU mechanism. And the onshore investors can therefore invest in the offshore bond markets, primarily in the CNH products through this mechanism directly without any transaction cost. And we believe this pool of investments will further deepen next year. And this year, we're already seeing like 700 billion to 800 billion renminbi worth of capitals coming to Hong Kong to support the markets.
One more interesting that I hope you could talk about this is interesting for global viewers. The dichotomy between onshore rates where, let's just call it, they're very, very low, and the preference is certainly lower borrowing costs, against somewhat higher yield here in Hong Kong, but higher yield, of course, when you look at the US. What conversations are you having with your client in terms of, if a client is able to access both markets, what is the current preference, right, in terms of fundraising, and why? Offshore or onshore?
Yeah, I think my clients has two universe, right? One is those clients who are based in China. They're doing this cross-border bond raising or financings for their companies to expand either overseas, or they want to bring the money back to China for investments. And the other universe of my client base is actually international clients, like our Hong Kong clients, like our Southeast Asian clients, who are looking for diversifications. So I would say the behaviors tend to be very different. For the China clients that I can see, because of the lower rates environments in domestic markets, a lot of clients actually chose to refrain from doing US dollar financings anymore. They go back to the home markets and raise more bonds issuance in the domestic markets, because central bank has keeping this, loose monetary policies to keep the ample liquidity in the domestic markets, which provide a very lower funding cost and extension of maturity profiles for the domestic borrowers. However, for some of the borrowers who have international needs to diversify, or they have offshore projects to invest and expand globally, they will still choose to come to the international markets to either issue a dollar bond or issue a dim sum bond, the renminbi bond, in the offshore markets and invest those proceeds into their overseas projects.
Janessa, thank you so much for taking the time. There's lots more to talk about. We'll talk to you again next year.
Yeah, thank you very
Janessa Jadeh, looks like it's going to be busy, the pipeline there, her and her team. Investment Banking MD and head of Offshore GCM at CICC. Just very briefly, a look at equity markets. We'll take a short break. Japan is up 2%. This is the China Show.
Taking a look at some of the movers here, we are watching gold miners because we have seen metals rallying to a fresh record this morning. Gold at a new high, but looking at some of those miners moving to the upside. Also taking a look at what's happening with Honhai because its Foxtron vehicle unit has agreed to acquire the Taiwanese EV brand LuxGen. It is expected to help it expand out its EV ambitions. More ahead. This is Bloomberg.
Welcome back. Just some news. This one has just come in. This is in Malaysia. This is with respect to the former Malaysian Prime Minister Najib Razak. So he's effectively lost a court bid today to serve out the rest of his prison term under house arrest. So a high court has ruled that this royal order that allowed Najib to be placed under house arrest was not valid, and that the king cannot decide independently of the Pardons Board. That's what we know so far. We'll leave it at that, and we'll bring you more details once we have more information on the case. But the former Prime Minister, just to say the headline, has lost his bid to serve out the rest of his jail sentence at home. Bell.
Yeah, and that is slated to end in 2028. Let's also take a look at what's happening in Japanese markets, though, because we are moving through the morning session, and you're seeing quite strong gains here across the board, being led by the tech sector, and actually the SoftBank is one of the biggest standouts so far in the session. It does appear that not only have you got those tailwinds from the US session on Friday, where we saw an outperformance again of tech and stronger performance across the board generally, but also it's the Japanese yen story with a weakness there that you're seeing at 157. So SoftBank, you can see we've got local media reporting that they are going to be developing AI with the private sector, or Japan is looking to develop AI with the private sector, and that does, of course, include SoftBank. SoftBank really already in the session doing well, given you saw the likes of Oracle up 6% on Friday, and both of those companies are working closely together on Project Stargate in the US. What else we're tracking is actually the maker of Mini Motors. That's Nidec this morning because we do see the chairman of that company stepping down, or its founder stepping down from his position as chairman of the board. This does follow the discovery of accounting issues that damage the reputation of this company. So his quitting is being seen as a positive for the business. Let's also shift, though, to the 7-Eleven operator 7 & I, because it's pressing its US convenience store business to deliver a faster turnaround as the retailer seeks a public listing of the unit. Let's bring back our senior editor, Reed Stevenson, joining us now from Tokyo. So, Reed, we've been discussing there's a number of different initiatives the company is taking for this, but just spell them out for us.
Yeah, essentially what 7 & I is doing is they're really trying to kind of get the U.S. business going again ahead of a planned initial public offering in the second half of 2026. Some of those initiatives involve boosting its private label presence, essentially. So 7-Eleven branded products in the stores which have a higher profit margin, larger format stores, better management of the supply chain. And really all of this is to sort of create an argument for potential investors that the business still has a lot of runway to go in, what is actually a kind of a tough environment for U.S. Retail at the moment.
Yeah, so talk us through then that sort of toughness we've been speaking about, for instance, the concerns around the health of the U.S. consumer generally, but what are the biggest challenges that the unit faces?
Yeah, I mean, there's kind of two fronts. I mean, first of all, everything is sort of related to inflation here. people tend to go and look for better deals rather than convenience when prices are high. So that's a headwind against, any convenience store operator in North America at the moment. But also there's a lot of competition. Many of them are getting into food, and so now you're beginning to compete with, fast food and other outlets. And then, dollar stores as well also have become sort of an alternate option for many people when they go looking for the things that they buy at convenience stores. So all of that is sort of a headwind, but essentially, the U.S. operation for Seven & I has sort of been, a headache for a while. They went after scale. That really hasn't delivered outsized returns. So what they're really trying to do is, improve the quality of the business, raise those margins so that they can really try and unlock value through this initial public offering that they're aiming for in the latter half of next year.
Yeah, so I guess up against a bit of a timeline now. That was our Bloomberg senior editor, Reed Stevenson, there in Tokyo for us. So, yeah, one of the big listings we'll track next year, Dave.
Something among many other things we're looking forward to there. Just an update here, some major stories we're tracking at this point as well, just to pivot the page here. Bloomberg has been told that the U.S. is, and this is on the Venezuela story, has been told that the U.S. is still pursuing a third oil tanker near Venezuela as President Trump intensifies an oil blockade on Nicolas Maduro's government. A source says that the Bella 1 tanker is a Panamanian flagged vessel sanctioned by the U.S. Now, the attempted interdiction here follows the boarding then of the Centuries, that's a separate one super-tanker, early on Saturday, and the Skipper back on December the 10th. Now, President Trump's top economic advisor says a Supreme Court ruling against the administration's tariffs regime would create a major admin problem. Now, judges are currently weighing a legal challenge to the tariffs Trump has imposed on dozens of nations. Kevin Hassett says that the challenges of refunding those levies should deter the court from ruling in that direction.
We really expect the Supreme Court is going to side with us. And I also think that if they didn't side with us, that it's going to be pretty unlikely that they're going to call for widespread refunds, because it would be an administrative problem to get those refunds out to there. But basically, whoever paid the tariff, like actually cut the check to buy the thing, would be the person who would be getting the refund if there were one.
Now, U.S. Special Envoy Steve Witkoff says that Trump administration officials held productive meetings with Ukrainian and European counterparts in Florida. Now, he says discussions covered the existing 20-point peace plan, a U.S. security guarantee framework, and economic development. Ukrainian President Volodymyr Zelensky also called the talks constructive, but noted that signals from Russia remain only negative. Now, the U.S. launched large-scale airstrikes on more than 70 targets across Syria, fulfilling President Trump's vow to strike back after killing 2 U.S. soldiers. Now, the U.S. Central Command said on Friday that fighter jets, attack helicopters, and artillery targeted ISIS infrastructure and also weapon sites. Now, Defense Secretary Pete Hegseth posted an X saying the move does not mark the beginning of a war, but is a declaration of vengeance. Bell.
Yeah, and Dave, we're also tracking those tensions between Thailand and Cambodia, because Thailand's military has reportedly struck targets in Cambodian territory over the weekend, including bombing a casino and a bridge. The attacks come ahead of an ASEAN foreign ministers meeting that's scheduled for Monday, aimed at diffusing those tensions. But let's bring in our Southeast Asia managing editor, Katrina Nicholas, who's with us here in Sydney today. But yeah, I mean, we've certainly seen these tensions flaring between the two countries of late again. But what exactly happened over these last couple of days?
That's right, and this is fighting that's been going on for about 2 weeks now, with no sign of de-escalation. So what happened over the weekend? The Royal Thai Air Force carried out significant airstrikes on 2 targets inside Cambodia, an Ojek bridge that was described by Thai military sources as a strategic supply route, and also a casino complex that was hit on Saturday, with Thailand asserting that those sites had become bases to support Cambodia military operations. Cambodian officials have condemned those attacks as attacks on civilian infrastructure. Now, this conflict, as I said, it's been 2 weeks now. It's not showing any signs of de-escalation. It's displaced hundreds of thousands of civilians on both sides, about 750,000 now, and 40 people have been killed. Increasingly Thailand is framing parts of its offensive as a war on scam centres. So that muddies the waters somewhat. It's saying that some of these facilities, particularly the casinos that it's targeting, are linked to transnational cybercrime and fraud networks. That adds quite a complex security dimension to what fundamentally started as a territorial dispute.
Yeah, certainly adds a new implication, I guess, a new justification for their actions. But as we said, there's the ASEAN foreign ministers meeting coming up later today. What exactly are we hoping to see in that, and what's likely to be achieved, do you think?
Yeah, so all eyes today on Kuala Lumpur. That ASEAN Special Foreign Ministers meeting kicks off there in about 20 minutes for now. We expect it to last well into the evening until we get some resolution there. But this is, sort of being seen as the most tangible chance yet to secure a formal ceasefire and to halt this recent escalation. Diplomats hope the meeting will sort of reinvigorate dialogue after previous agreements have, of course, faltered, and at least, framing the talks as being really critical for regional stability.
All right, well, then we'll watch for the readout later on. Katrina Nicholas, thanks very much. That was our Bloomberg Southeast Asia Managing Editor, Katrina Nicholas there. And another political story that we're tracking today, the Trump administration is defending its move to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photographs or photos, including one showing President Trump, was among those removed from the department's website before being restored. Deputy Attorney General, that's Todd Blanche, says it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women. And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public, seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
Now, the latest release of the so-called Epstein files includes thousands of pages of pictures, phone numbers, and notes from investigations, but with many documents heavily redacted. Our Miles Miller has more on the release and also the reaction.
The Justice Department releasing a new set of documents tied to Jeffrey Epstein, marking the most extensive public disclosure yet in a case that's fueled political tension for years. The files were posted online after Congress passed legislation in November forcing their release, overriding long-standing resistance from the Trump administration. Trump ultimately signed the bill under pressure from Republican lawmakers who had demanded transparency around Epstein's case. What's new is the scope of what's being made public. The Justice Department releasing thousands of pages of materials from federal investigations into Epstein, the financier and convicted sex offender who died in a Manhattan jail in 2019 while awaiting trial on sex trafficking charges involving underage girls. Authorities have ruled his death a suicide. The records include investigative files, flight logs, travel documents, internal Justice Department communications, immunity agreements, and materials related to Epstein's death. Much of it previously sealed or only partially disclosed. The response was immediate, with users trying to access the documents being placed into online queues as traffic overwhelmed the Department of Justice website. Officials emphasized that this is not the final release, with Deputy Attorney General Todd Blanche telling lawmakers the volume of materials to be reviewed meant that it wasn't possible to meet the law's requirement to release all files by Friday. He said more documents are expected in the coming weeks as officials continue to review records to protect victims and avoid compromising ongoing investigations. Among the materials released are photographs and records involving prominent figures. One tranche includes a photo of former President Bill Clinton with the late musician Michael Jackson. Clinton has denied knowledge of Epstein's crimes. The release carries political risk for Trump, who has acknowledged a past social relationship with Epstein, but says he had cut ties with him decades earlier. Earlier disclosures this year were criticized as incomplete, fueling anger within Trump's base. With more records still under review, Friday's release is unlikely to be the last chapter in the Epstein case.
And that was Miles Miller there with the latest on, of course, the big story over the weekend. Right, just ahead here on the China show, Ka-shing, that's the Hong Kong billionaire, of course, is, well, a look at how he's really remaking his business empire as this shift across generations looms in his family business. More on that story coming up, and the deals really that could reshape the future of CK Hutchison. Welcome back. You're watching The China Show. A closer look now at Hong Kong-listed CK Hutchison Group. It's set to enter the new year with really potentially some major changes, a series of deals pending. It could really reshape the future of the conglomerate amidst this looming generational shift. For more on the story, let's bring in our conglomerate's consumer and gaming reporter, Shirley Zhao, with a take today. So, yeah, I guess we'd start off with the year that's been and how that informs us about the potential major changes ahead.
Yeah, so Ka-shing and his family are planning basically 3 major moves for their flagship conglomerate, CK Hutchison. So they are considering an IPO for their retail arm, A.S. Watson, which is their biggest revenue contributor, and they are also considering options for their telecom businesses, including a potential listing as well as sales and mergers in some markets. And of course, they are planning to sell 43 ports globally, which account for the majority of their port portfolio. So if all these deals are completed, that would be quite significant because CK Hutchison would have already divested or spun off most of its core operations, and that could also grant the Lee family a fresh war chest to fend off global risks as well as preparing for future opportunities.
It's more than a facelift, right? If these 3 simultaneous deals come to fruition, do we have I know some of these are fairly complicated, like the ports deal, for example. I know we've covered that as well recently. But do we have a better understanding of when we might see these deals actually come to fruition?
So these deals all face pretty big challenges. So, for example, the ports deal has angered Beijing because of the involvement of the U.S. investment firm BlackRock as a buyer. And President Donald Trump has come out and said that this is a U.S. win over the strategic Panama Canal because the 43 ports include 2 ports in Panama. So Beijing is unhappy, and CK Hutchison has invited a Chinese investor, China's biggest shipping company, COSCO, into the buyer mix in the hope of appeasing Beijing. But talks, we learned, that have slowed down recently due to the complexity of the deal. And CK Hutchison's executives have said that it's unlikely for the deal to be completed this year. And other deals involving telecom, for example, would often require antitrust scrutiny in terms of telecom mergers in some markets. And the retail arm listing, CK Hutchison has actually been considering that on and off since 2013, but it still hasn't been able to do that due to market volatility and valuation issues. So it's not easy to pull this off. But we learned from people familiar with the matter that CK Hutchison wanted to do these deals because they want to unlock value for CK Hutchison's assets. If you look at CK Hutchison's stock, it has really been trading at a steep discount ever since 2015 when CK Hutchison as a company came into being. And the Lee family really believes that these moves can potentially reduce the discount and lead to a completely reshuffle of returns for shareholders, which of course include the Lee family, which owns 30% of CK Hutchison.
I was actually going to ask you about the why, and because there could be a difference between realizing value by listing some units, and a complete pivot in terms of, you mentioned, right, core businesses, and the fact that they're facing a lot of regulatory friction means that they've gotten into very central businesses, right? And I wonder whether it's simply unlocking value, or is there a major pivot away, strategic pivot into new businesses, and what new businesses could those be?
That's also a very good observation. So if you look at how Ka-shing built his empire, he developed really close relationship with major banks in Hong Kong as well as China's top leadership. And he utilized that relationship to expand globally. So by the early 2000s, he has already developed his empire into the world's biggest port operator, as well as the biggest Asia investor in the European telecom sector. But if you look at today's global environment where his elder son Victor is operating in, it's completely different. So Ka-shing's early bets in sectors including ports, retail, telecom, utilities, and infrastructure paid off because of globalization, because these sectors benefited greatly from globalization. But Victor today is facing a world where deglobalization is increasingly becoming the theme. So observers are saying that this is a good time for the Li family to monetize on the giant wealth that they have built over the past decade. And some observers are saying that this could lead to a sector change for CK Hutchison. But in terms of what other sectors CK Hutchison could invest in, or is there any other use the family is planning for the capital that they may accumulate from these deals, it remains to be seen.
There we go. The starting point, I guess, of how a conversation around how conglomerates remain relevant, agnostic of or through generations, let's put it that way. Shirley, fantastic piece there. For our clients, you can check out Shirley's piece. It's on the terminal. It's also on the website for you. Shirley Zhao there, conglomerates and consumer and gaming reporter. A look at markets. We're coming off highs quite quickly. We're now flat in the Hang Seng Index. Plenty more ahead. This is Bloomberg.
Welcome back, and here are some of the corporate stories that we're tracking today. President Trump has announced deals with 9 more pharmaceutical companies in a bid to lower drug prices for some Americans. The agreements with companies including Sanofi and GSK come in exchange for a 3-year reprieve from threatened tariffs. The latest pledges include price cuts for low-income earners and matching of international prices. Disney's Avatar: Fire and Ash has debuted at the top of the Chinese box office, earning almost $58 million in its opening weekend. It's the second highest debut for a foreign title this year after Zootopia 2. China's box office take has topped $7 billion this year, exceeding last year's total. The top 5 foreign films have generated about $850 million. So, Dave, I think it's interesting because at the same time you're seeing that strength in the Chinese movie market, Chinese consumer stocks have certainly been one of the standouts to the downside this year.
Yeah, they have. And you got to wonder where spending 2 hours watching movies, if you think about it, the time spent watching movies is about the same time, if not shorter, than the time people spend nursing an already quite lukewarm matcha latte at cafes, right? And that's just to say 2 hours of paying something and doing nothing. I guess in some ways you could spend more. You could find a better time spending more for 2 hours, but that is just to say, of course, movie stocks are on the way down. And you know what? That's not a bad life, isn't it? Okay. We'll leave you with a look at Hong Kong listings today. Not the best day as far as debuts are concerned. It's been a fantastic year, though. And, we will see you all tomorrow. Thank you for joining us today. You're watching The China Show.